What is up, guys? I just want to have a quick talk with you about how invalid zones can be actually valid if you know how to use them properly and if you know how to target them. John actually discovered this and I was back testing it since then. And what I'm talking about is if you have a high time frame shifting bullish and it's close to your point of interest right here, all these liquidity, right? That is gonna get grabbed with this move. But all these offer S&D zones, okay? And now, not necessarily they are invalid, but they are invalid for the sake of when we come here and then coming higher, okay? They are not invalid till we reach this point right here. But when we do, and when we see the minor break of structure in this higher time frame zone, we want to see reversals, and all this is being liquidity, okay? But that's not to say that these zones, after the break of structure that happened right here, may not hold. What John found out is if you have a zone that's structurally incorrect and invalid, it can still have some mitigation, but the mitigation will only occur and target all the inner liquidity, but still not shifting in structure to then continue higher. I know it may be a little bit confusing, but it can help a lot of you who are struggling or don't know what zones to focus on and where targets might be. So let's go over the example. I have this example which I was discussing with Pei from our group. As we can see, the Euro USD broke some structure, shifting bearish, okay? It was on a higher time frame. We have the mitigation that occurred here, and right now we want to see the target to get broken. But as this was happening, by the time this was happening, it left all these like quadruple tops. I don't know how many tops there are, but let me check. You can see the first wick, second, third, fourth. Right, there are many wicks. There's liquidity. Fuck. Okay. As you can see, there is a lot of liquidity resting above here and above all these highs. And when we tap into demand zone, that is higher time frame, because remember these are all 15-minute OBs that are invalid, just for the sake, because we already tapped the 4-hourly structure, and 4-hourly structure is going to be what? Bigger, always bigger, because the big fish is always bigger than the small fish, and you can't just expect 15-minute zone from here to grab the new highs. But what we can expect from the invalid zones is, okay, look at this, all liquidity. We grab the liquidity and tap the invalid zones. It's perfectly fine to have a buy from here with the stop loss here, but you gotta know what to target. If you are to target these, then you're completely wrong. If you are here to target these, then you're just dumb as hell. And if you are to target these, then you're completely fine. Because what John discovered is these invalid zones within a range, once we are shifting in the direction, these are all invalid because they function as liquidity now, okay? But just because they function as liquidity doesn't mean they don't need to have any mitigation. As you can see, we can expect the mitigation, and it's completely fine to look for buys here if we are to target the inner liquidity that are resting here. Okay, so my expectation and my bias was to come and grab all the liquidity here after tapping this invalid point of interest and then coming even lower. If we are to see structure, live trades, you can actually see it happened. This was the invalid descent. No, wait, where was it? It was right here. Yeah. So watch what happened. This was my already preset bias that I wanted to see this liquidity get cleared. Maybe tapping into this demand zone, but it was ultimately high, so I didn't know if it's gonna reach there or not. But I was cautious and I wanted to see all this liquidity being cleared and then some break of structure without leaving much liquidity at the tops. So let's see what happened. Exactly as planned. As you can see, we tapped the liquidity point and grabbed all the liquidity lows, tapped an invalid zone, which is this one, because we are already shifted bearish. And you can see we just come and ran all the liquidity here. And if we take a look even further, we we take all the liquidity with this wick, and then made another wick, and made double tap, so another liquidity here. We then broke the liquidity again, grabbed all these highs here, and then broke in structure. For me, this is exactly what I was waiting for. All the liquidity gets ran. We now wait for the minor break of structure, and now we can be involved in whatever point of interest there is, as long as it liquidates something. Exactly here. We have the tops, the liquidation, the break of structure. Now we can refine this top. That's how I code this EU cell, just to let you know. So there was all this liquidity, so like, I don't know, quadruple top, you can call it. We tapped into high time frame demand zone, we broke structure, and then I refined. Yes, I refined this last up move or down move to the 50% and took a risk entry on this. It's more probabilistic that it's gonna come here and drop than it is to come here and going skyrocket. I mean, it can happen, but the fact that we liquidated all these highs, then we were making new highs that we liquidated, broke structure, it's more probabilistic to just go and continue the overall trend of the smart money. Because we can clearly see that banks are involved. How do we know? Simply, liquidation, break of structure. What this tells us is banks sold heavily in this large area. I like to refine, so I refined, tapped perfectly 50%, and then just melted down. And yeah. And another example is, as we broke this liquidity and get run through, we made another invalid zone. So as you can see, all this is now liquidity that got made during the push down, and now we are tapping another invalid zone right here. So not only this, but we created also this one. It's invalid because if you have a shift in structure, these are targets. All of these should be targets, nothing else. These are targets, these also are targets. Let me go higher time frame. These are targets, and until we reach 4-hourly target, all of these are now functioning as liquidity to be ran, but it doesn't mean that it cannot have any mitigation. And exactly that's what I'm waiting for. If we go to the 15-minute, this one is structurally invalid S&D zone, but I still expect to have a mitigation to what? To push and break all this liquidity that can come in lower. Statistically, I think it's been working like 75% of the time, because John was showing me, and I love it, because there is another example that I have circled. Watch this. We shifted bullish after this break of structure here, okay? We shifted bullish. Why would you be bothered in selling here when we shifted bullish? Okay, so this ultimately is invalid S&D zone, okay? But, oh, okay, fuck, yeah. Let's go like that. Let's make it black. Okay. So this is invalid S&D zone, right? And what you have to keep an eye on is below all these lows is liquidity. Watch what happens. Even though we shifted bullish on a higher time frame with this break of structure, okay? All the shit that was here is invalid now, because these are functioning as liquidity. But guess what? We tapped the invalid zone right here and came to run all the liquidity without breaking anything. So you can still be participant in shorting this to target this liquidity before going significantly higher. It's happening across all time frames. This is what I want to talk about with you. Hopefully it makes sense. We can go over it once again. Let me just new. Okay, so imagine you have a break of structure. You have liquidity. They got broken. Okay, this is low time frame, but higher time frame we're coming from this area. Okay, and right now we want to see mitigations. this is functioning as, okay, we broke structure here. This is functioning as a liquidity target of the overall bullish trend because we are operating in this. But this itself can function as the invalid S&D zone. Let me just put it like this. Once we break structure here. So the bullish bias is confirmed. We actually mitigate it. Okay. We mitigate it. And all these are invalid S&D zones. But as we are making Wyckoff here, with the break of structure, we are not moving in a straight line. We are always making highs and lows, highs and lows, highs and lows, back and forth, left and right. So exactly when this minor break of structure happens, these zones are not ultimately invalid, because as we are creating higher highs, higher lows, higher highs, higher lows, we are making liquidity. And this liquidity needs to be ran before continuing any higher. So what we can expect is we can have this zone to be participants and wait for Wyckoff to liquidate all these emotional people that are buying and selling back and forth off of these higher highs, higher lows that are within inner structure. And we can still be participants for this low to hold and come significantly higher. And exactly this can happen with this higher zone right here. If we tap, we break, maybe we have some mitigation of this invalid zone and a significant push up, Exactly the same can happen here. I know this is liquidity for us, but it can still present some mitigation. If there's some liquidity right here, like resting like quadruple, double or triple tops or lows, it can get run like this. Still not breaking the structure, but keeping the overall trend at the buy side. Because what we are doing ultimately is we're leaving emotional people to trade, but they don't know when they're gonna get liquidated. Because all the trend line and retail traders are only using 2 lines, no liquidity, nothing. They don't even know that this is liquidity. All they know is this trend line is holding and it's gonna keep holding indefinitely. Oh, watch, I gotta buy here, I gotta buy here, I gotta buy here, and sell here, here, here. But what they don't know is they're just building liquidity. And this liquidity, even though we are in an uptrend, these zones may hold and just function for the sake of grabbing all this, but still keeping this protected low protected, maybe mitigating it again and coming significantly higher. I hope it made some sense. If you have any misunderstandings, make sure to just PM me or leave a comment. I will actually read it. I read through all of the questions. So yeah, just because we are shifting bullish on a higher time frame or bearish doesn't matter. It doesn't mean that all these invalid zones may not have mitigation. But if they do have a mitigation, we can expect the liquidity to be grabbed and then coming significantly higher. See ya.